Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hello, everyone, and welcome back to the IRS Debt and Audit Podcast with Brian Loughrin. Brian's a seasoned tax attorney based in Tampa and the founder of Tampa Tax Relief. For more than 25 years, he's helped individuals and business owners across the country resolve serious IRS problems, from audits to tax debt to cases in the U.S. tax court. I'm Sean O'Connor, and today Brian and I are talking about what changes when someone owes the IRS over $100,000 and how larger balances can affect the way the IRS approaches a case. So, kind of interesting to me. Brian, how are you?
Good. How you doing, Sean?
I'm good. I'm glad I don't owe the IRS $100K. This is, as we record this, we're kind of in tax season. What point does tax debt start to feel like a much more serious problem from the IRS's perspective?
That's a good way to ask it from the IRS's perspective, because I get people calling and they're sometimes very concerned, very worried, and I say, well, how much is it the IRS is saying you owe, and a rounded number, and in some cases it's maybe a few $1,000s or something, and in that particular case I don't discount their concerns, because it could be a tremendous amount of money to that person. But from the IRS's perspective, for a long time, going back many years, they had a threshold of $25,000. Above that required a full financial statement to work out some formal negotiation or resolution. Then it got bumped to 50, and then it got bumped up to, for a period of time with COVID and that, it was around 2. It kind of varies somewhat, but what I think is there's kind of something magical about a six-figure balance. I just think it's a number that people see in a certain way. I think the IRS sees it in a certain way. So I wouldn't say 100,000 is that necessarily that magical number, but anytime you get into six figures and above, it kind of takes on a different characteristic. The collections from the IRS perspective.
Yeah, I mean, it makes sense. It makes sense to me. To clarify something though, so you're saying there's there's a moving threshold depending on who's in charge and the mood of the day, COVID, that sort of thing, where you can work out a deal with the IRS that wouldn't require a full balance sheet audit. Is that what you said?
Pretty much. And, for a long time, that threshold was anything above 25,000. Then we got to anything above 50,000. And then it got to a point during COVID, I think they were fast tracking a lot of cases. And, people say, well, I'm going to go through the IRS website and I'm going to look at the manual and I see this and I see that. And the reality is, in some cases, when you're dealing with the IRS, you're dealing with individuals at the IRS that some of them look at things a little bit differently. And it doesn't mean that they can just do, freewheeling what they want to do. But in some cases, you're able to put something in place. Or say you even have a very large balance above 100,000, adding an additional balance to it. In some cases, you can kind of roll that into the existing resolution. So again, you start getting above that, it's a different animal. But even beyond that, when you contact the IRS and say, look, I have a client that has a balance of, let's just say 100,000, 200,000, or what have you, their concern is obviously a collection of what's owed, but their initial concern, and more important to them, is where is your client year to date? Now, obviously, they're not going to ask that question the first week of January, but you get pretty much a few months into the year, and the IRS is going to say, where's your client year to date? And people say, well, what does that mean? Well, what they're asking is, has your client made estimated tax payments, or are they W-2 having withholding done? Because in the IRS's eyes, they are initially more concerned about a taxpayer getting current for the current tax period that you're in, not looking at next year or last year, but the current year.
Interesting.
They're more concerned about that initially than they are on the collecting of the past due balances. And when I tell people that, sometimes they go, well, gosh, that's great news. I'm current. I say, well, hey, they still want the old money. Don't get me wrong.
Yeah.
I mean, they're still wanting to collect, but they want people, they want people to stop pyramiding, or I'll say stop the bleeding, because the reality is, if you don't take care of where you are in the current year in terms of making enough deposits to end the year somewhat near even, then you're simply going to be taking this year's earnings and paying on an old year, and then the next year you're paying on the other old year, and the next year, and so forth.
Yeah.
And it's like a hamster on a wheel. You're never going to get off that treadmill.
Yeah. Oh, got it. When they reach this level, whether, six figures, whatever the number might be, what kinds of enforcement actions start to come into play at that level when they find enforcement necessary, they take some action.
Well, obviously liens, and that's something that
Mhm.
we've talked about in the past, which obviously a lien is different than a levy. A levy is an actual seizure of monies or property, usually monies, of course, most of the time, 98% of 99% of the time.
Mhm.
A lien is simply just a representation of debt, and it's a mechanism by where the IRS can keep their place in line as far as collecting. But liens being filed, that's definitely something that comes into play. And that's a large concern for a lot of people, especially people that are doing a lot of financing in their business. Maybe they're constantly having to have lines of credit
Mhm.
um, for operating their business. That's a big part. But also, too, obviously, there's a concern about levies, which would be something like a bank levy or some type of income garnishment, a wage garnishment, or accounts receivable garnishment. So those are really are the largest ones that people are most concerned about and should be concerned about.
Mhm. Mhm. And when it comes to a lien, is that typically like on real property, real estate, that sort of thing? Or could it
Well,
be?
actually, and we do have a podcast on liens and levies. You can scroll back and look at that. But
Yeah.
an IRS lien attaches to everything that the taxpayer owns and everything that they will future acquire
Okay.
until that debt is satisfied.
I see.
And so that means everything from the shoelaces in your toothbrush all the way to your motorcycle or boat or what have you. As far as a house or real property, they call it land. If it does attach, it's usually filed where it's the county in which the taxpayer resides or has a mailing address, which for most people, if they own a home, chances are they're going to be living in that home in that county, what they use as their address.
Yeah.
And so, of course, when it attaches to that, that kind of is a whole nother animal, which encumbers the sale of it and so forth. People say, well, what about my motorcycle? What about my jet ski or snowmobile or my boat, my cars? Those all have titles. Does it attach to that? And in the strictest sense, legal sense, yes, it does. But the IRS doesn't take the time or the effort or really even have the ability to file liens against every type of vehicle or any type of thing that people have that has a title to it. Um, but in the strictest sense, it does attach to that, yes.
Got it. Got it. Thanks for the clarification. When I'm curious when balances reach this sort of magical six-figure level, does the timeline or pace of a case tend to change? Like, does the IRS kind of kick into gear?
Well, and again, I'll move it up even move the decimal, over to from 100,000 to say a million or a
Yeah.
couple spaces over, I should say. Um, it- Generally, the larger the balance, the more likely it's going to be assigned to a local revenue officer for the collections effort side of it. And so, I mean, it's as plain as this. The larger the balance, the more challenging the case, the more
Yeah.
difficult the case. And I just tell people, they say, well, listen, this is what happened. My business tanked, or there was illness in the family, or what have you. And I say, listen, I mean, I'm understanding that there's a challenge that you face because you have a good track record for many years leading up till now. I get that, but the IRS, they're just they're in a collection mode, and so when you start getting into the much larger balances, obviously it's going to trigger not just possibly it being assigned to a local revenue officer, but I'm certain the software, and of course the IRS doesn't disclose a lot of this information, would never expect them to, kind of moves cases forward in the pile, so to speak.
Yeah.
And so it's like anything else. I tell my clients, look, if somebody owed you $1,000 and they were past due, I mean, you might be kind of concerned, but if they owed you 10,000 or 100,000, you'd be a lot more concerned.
Right.
So it's no different for the IRS.
Yeah. Yeah. I'd be 10 times more concerned.
Yeah.
Exactly. You mentioned, I think you touched on just, someone's financial picture. How much weight does, the financial picture carry when the numbers get up into that, you know,
Well, it's
stratosphere?
everything. It's everything because I've had situations where people come in owing six figures or seven figures, millions, and they end up maybe not paying anything or very little on the balance. I've had other people come in, they might owe, let's just pick a number, $42,000, and the IRS is wanting them to pay, at least from what steps they've taken to that point. I got involved in the case. The IRS might want them to pay, $3,000, $4,000 a month. Say, my gosh, well, how can that be? It's all based upon that particular taxpayer's financial situation, which
Right.
really starts with income,
Right.
obviously, and then assets. And assets are things that they generally own outright. If it's something encumbered, like somebody's making car payments on a car, even something like a boat or what have you. It's a little bit different, but really it's all about the income. And then, of course, whatever expenses they have that the IRS deems as allowable expenses, or what they call legitimate expenses, such as, basic housing, transportation, out-of-pocket medical, that type of thing.
How does the larger balance uh, limit or shape, the resolution path that might that they might go down?
Well, the dollar amount itself, but also many times you have a situation where that particular balance has a limited time frame for the IRS to collect.
Oh,
And again, we've talked in previous podcasts about the IRS generally has a 10-year window to collect once a balance becomes due and owing. So if I'm working with a client that has, it could be a 50,000, 150,000, $1 million balance. If the IRS is on the short side of collecting it, say they maybe only have, let's say, a couple of years left to collect, they're going to be much more aggressive, and they're going to obviously want a much larger amount if they're looking at some type of a payment plan.
mm,
We haven't really put this in the context of, say, an offer in compromise or innocent spouse claim or something where the taxpayer's taking a direction where they're going to be able to potentially avoid paying maybe any of it or the vast majority of it. But these answers here today are really more about somebody looking at some type of a payment plan or installment agreement, whereby they can continue to do what they're doing because they're working. They have an ability to pay towards the debt. So going back to that, if there's a very short time frame, obviously the IRS is going to be very aggressive. And I get that from clients quite often. They'll say, well, this debt's pretty old, and a few years ago I called the IRS and they wanted, fill in the blanket, whatever. They wanted $1,800 a month. And they say, now you're telling us you talked to the IRS, they want 5,800 a month. What in the world's going on? The debt isn't that much larger. I say, well, it's not, but they have a lot less time to collect. And so it's like anything else. And again, I say to my clients, put yourself in their shoes for a moment. If somebody owed you X amount of money and you had 4 years to collect it, you're probably not going to get that concerned the first 6 months, maybe the first year into it, and figure, well, I got another 3 years. If all of a sudden you wake up and you've got 11 months left to collect that debt, and you contact that person that owes you money, they're going to say, whoa, what's going on? How come you're so aggressive? Last time I talked to you, you didn't want this much. Well, hell, I had 4 years, but the IRS isn't going to come right out and say that to the taxpayer.
right,
They're not going to tell them that. They're not going to
right,
put it in a letter. They're not going to say that over the phone to the taxpayer in the event they call themselves. I know that. And of course, my clients know it because I tell them. It's not top secret, but it's not something the IRS leads with.
right.
So just keep in mind, if they're on the short side of collection, it really makes the case much more challenging. And again, I get many cases like that where people have a large balance and they're carrying it for a long period of time. And even through the COVID years, actually, there hasn't been the kind of aggressive enforcement collection or action with the IRS as there was before COVID. But it's ramped up a lot lately in the last couple of years, and they're back in business, so to speak.
Yeah. No, that's interesting. Yeah. I mean, I do love the idea, and this happens when I'm all the time. We're talking about, the law's the law, and we're dealing with government agencies, but then at the same time, you're dealing with people, and
Yep.
and depending on who you get on the phone and what, or just personifying the IRS as a person, it really helps put things in perspective.
I want to say something to that, Sean, and that's
Yeah.
that's a really good point because it's easy to look at a government agency like the IRS, or if you deal with any other large government agencies, it's just this big monolithic robotic type entity with a big giant thick book of rules and regulations and statutes and so forth. And that's all true, but it takes people to implement it because if it didn't take people, you could just simply go to your computer, type in a bunch of information, hit the send button, and wait for the answer. It doesn't
Yep.
work that way. So it definitely does involve the characteristics of the people you're dealing with, the IRS, my clients. And then, what I like to think is that we can bring kind of a good balance to that, understanding where our clients are coming from, understanding realistically where the IRS is coming from, and try to put something together that's going to be acceptable to the IRS, but at the same time livable and reasonable for our clients. Because I tell my clients, there's no way in the world I'm going to put you in a situation that we both know that you're not going to be able to be successful with. There's
Yeah.
no way. What's the point? And realistically, the IRS doesn't want that either.
Right.
People say, well, I called and I offered to pay him $10,000 a month to get him out of here. I said, well, hell, you don't even make 10,000 a month. Why? They're not going to take that deal. Yeah, they rejected it. Well, they're not going to want a deal that isn't going to work for them either.
Yeah. Oh, interesting. Hey, we're up against time, and I want to leave people with one more question here, Ryan. What do people assume? Because you're kind of getting into that. What do people assume about large tax debts that isn't actually true in your experience?
That if they don't have the money to pay it, it just isn't going to get paid. There ain't anything they can do about it. And so they'll call and they'll say, well, I'll say, what's the IRS saying you owe? I don't need the exact amount. Just give me a rounded number. It's around, $240,000. I said, okay, what years is this for? What years? So I said, well, I don't have $240,000. I said, well, if you did, you wouldn't be calling me. You'd probably just write them a damn check. I get that. They go, I don't have any way to pay that. I don't have 240,000. I don't even have 40,000. I say, well, okay, but you got to be careful because they're going to be coming for this. And they say, well, they can't, what are they going to take? They're not going to take my car. I'm financed. I said, well, they don't want your TV and they're not going to take your basketball backboard or your dog's water dish or your golf clubs. Okay. They're not eBay. They're not Craigslist. They're not in the used stuff business. They don't even want your house. They're not Century 21. They're not in the real estate business. I say they're in the cash money collection business. And people say, well, I just told you I don't have the money to pay them. I said, you got a paycheck, you work, right? Well, yeah, but I need that to live on. I said, you and everybody else nowadays.
Yeah.
I said, that's what you need to be concerned about, or even what money you do have in the bank. So the misconception for a lot of people is if they feel like they can't just write them a check or go online and pay it, that there's nothing can be done. And that's not true. And you don't want it to get to a point where you have some type of a wage garnishment or bank levy or accounts receivable levy, because if that happens, as I tell people, that's the end of the road. I mean, that will choke anybody to death economically in a very short period of time.
Yeah, no, that's good advice. Listen, Brian, out of time for now, but I know we'll talk again in the future. Great to see you, and thanks for your insight.
Thanks, Sean.
You bet. That's it for today's episode of the IRS Debt and Audit Podcast. To learn more about Brian Loughrin and his work helping individuals and business owners resolve serious IRS problems, visit the website tampataxrelief.com. I'm Sean O'Connor. Thanks for listening. And do us a favor, leave a thumbs up, subscribe to this show, maybe share the episode with someone you know who would find it helpful. Have a great day.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.